Welcome to Master Trader, where you learn simple market analysis to make money investing and trading in the markets. I'm Dan Gibby, and in this week's Chart of the Week, we're going to show you how to intelligently and objectively trade this one pattern called a bullish inverse head and shoulders pattern. We've actually been on an incredible run here in our advisory letters with the recent volatility and strong week off the lows. In our advisory and swing letter, we booked actually 16 for 17 wins, and in the weekly options trader we booked 9 of 10, and in the prior week we were 16 for 16. So our objective approach, which is this, works very well in all market environments. It applies to trading anything that moves that you can chart and on any time frame. So there's many ways to skin the cat in the market. This is the Master Trader way. And we have these concepts, as I'm writing here, that make up the overall strategy. But we trade, as I said, anything that moves. Everything starts with a compelling pattern. No setup, no action. No pattern, no trade. We want to see what that pattern looks like in connection with the overall trend and trend quality, support and resistance, multiple time frame alignment. Is it showing relative strength or weakness to the broader markets, to the internals, to the sector? Retracement analysis gives us very important information about the supply and demand of the issue. Bar by bar analysis, like what is every bar telling us in connection with the overall pattern? GBI or green bars ignored, RBIs, red bars ignored, what the market bias is based on the market internals, which I'm not going to get into. But I'm going to review some of these trades. Some of these were, the majority of these were still in for our subscribers. And since there were so many of these inverse head and shoulders patterns that we took advantage of based upon the current market environment, that's why we're focusing on this pattern in this lesson today. So here's our setup. We have a left shoulder, which then it's just a consolidation, which we're calling a shoulder. It broke down, and then that's a lower low. So this is a bearish pattern. I have a lower low, I have a lower high, and it didn't go down any further. We don't know what's going to happen next, but it then rallied back up in the area of resistance and went sideways. We call that the right shoulder. So here's my head, which I'm just defining here for you. It's a downside shakeout, and then it retraces deeply back to resistance, consolidates bullishly, and then the trigger is to buy the breakout. Just like any other pattern that we teach, every pattern has a different quality to it, and as I reviewed in the last slide, you're going to hear me on every single slide talk about those concepts to come to a conclusion of how likely, what the quality of the setup is. This was a beautiful one, IWF, which is an ETF. It's similar to the Qs, but different. And we actually like this one better than the Qs because, well, let's start here from the bottom. This is bearish. That's a bearish retracement in this uptrend. Bearish consolidation, bearish gap. This was all bearish until this little retest right here. And then this bar closed deep into the red bar, and then it had a bullish gap breakout. That's where the head, this became a low of the head. Then it went sideways. This is bullish price action at resistance. Then this ugly red bar occurred on, you'll see on most all these charts on Tuesday, when Trump sent his tweet and sent the market into an intraday, tizzy. The next day it had a bullish gap up, and then on this day it was my gap breakout. So you could have entered this trade on this particular day. We waited until the next day to give it to our subscribers, and it gapped over the entry, which you can see here. This is our swing and options trader. So on anything that gaps over our entry, we give it a 5-minute high. So we're in this. This is an open trade, and this is what we call a price void. and that's critical to the quality of this setup. And that is a beautiful inverse head and shoulders. Our weekly options trader, we focus solely on selling options and spreads that expire 10 days or less with the pattern, of course. So here is MA, MasterCard. And I say here, you know what, we don't care about titles. And as you can see here, we don't use any oscillators. We use clean candlesticks and 3 moving averages on the daily, the 20, the 50, and the 200, color-coded volume. That is it. Focus on the pattern, not the names. So same ugly consolidation over here. Broke down. Bottoming tails. This tail, this green bar, range expansion. This is telling me buyers are lurking below. Bullish gap up. Bullish consolidation at resistance. Here's that same red bar ignored from last Tuesday. And I have a price void. So on this one, we sell credit spreads under, bull put credit spreads under support. So we see what the low of this major pivot is, and we go to the option table. We have a specific checklist for selling credit spreads. We sold this $10 wide for 80 cents a share. And then we, a day later here, look, October 8 to 9, a day later, we're over 50% of max profit. And that's a beautiful open trade right now. Another one here, the Qs. And this one, we did another put spread. Don't focus on it's a bullish inverse head and shoulders, even though it is. So you can see my description here to our subscribers. We're going to sell this $10 wide put spread. It's a bullish gap breakout of a bullish inverse head and shoulders and red bar ignored on the daily. This ugly red bar right here that I've been talking about 4 days ago. So that every single setup that we give to our subscribers, this is the format. The date, the symbol, the strategy, the technical reason for the setup, and a stop loss. Everything is compelling setup, proper strategy per our bias, whether it's stock or option, and then we have our protective loss, and then we manage in between. But look at all of these concepts here for our analysis is telling me that this is a beautiful setup. The price pattern is what I just talked about. Support and resistance. This is 100% retracement of this breakdown. Here is a bullish retest again. Here's a red bar ignored, bullish gap up, this red bar ignored. This is a concept we call transfer of supply. So once this gets through here, all of this resistance is meaningless. And because of the momentum move down, that's what we call a price void, where there is insignificant resistance to the left. And just kind of view them as football players, like I explained this to a child. There's many football players right here. There's over 2.5 weeks of them, and we're breaking out. And there's just a couple over here. So this is stronger than that, which should allow that to move higher. Moving average analysis, supported here at the 50-day moving average. You can see the 20 flattening and curling up. That in and of itself is telling me that it was a pullback in a 50-day price action that's in an uptrend and starting to curl up again. So the moving averages support the technicals there also. Amazon, we gave this one yesterday. Now it's sloppier. We like selling credit spreads just to get paid, as I say up here, predicting a short-term low. This ugly red bar ignored again. It broke out. This is a sloppier inverse head and shoulders. I purposely, they don't have to be textbook, and that's why we focus on the messages of the pattern. This was bearish, very bearish consolidation. This chopping around, very bullish consolidation, and it broke out. All we're doing is selling this put strike, this put spread. The low of this bar is 30.90, so we're saying I don't think it's going to go below there in 1 week's time. You can see October 9 to October 16, we're taking 7 days of risk. We're selling a $10 wide put spread, taking in $1.48 a share. If you sell one contract, $148 hits your account, and if you sold 10 contracts, $1,480. The stock can go up, it can chop around in a coma and go sideways, and it can even go down. It's 32.86 right now, so it can go down $196 before it hits our danger zone of the short strike in 7 days. We call this just no-brainer setups, no-brainers. Here's another one. I could go on and on. Left shoulder. This was a breakdown failure. Ugly red bar suggested lower prices. It snapped right back, consolidated at resistance. And so here, I'm pointing to this tail because when it was stronger in the day, in the morning, I called it a breakout of reverse head and shoulders, but the day was not done yet. And that's a concept we say, look, it's better to wait till the end of the day because we don't know what this bar is going to look like. So in this particular case, we told our subscribers, look, only buy a third of your normal lot size. We will look to add. This is an open trade for us. We're in at 256, so we got over $9 of open gain in that. Everything's reward to risk, and this is a beautiful price void. We have higher high, higher low bars, red bar ignored, and we're simply in management mode. One more example here just to show you it applies to anything on any time frame. This was a big momentum move, downtrend, snapped right back to resistance. This is over the lunch period. Now here's my 2 p.m. reversal. Here's my 3 p.m. reversal. By the afternoon breakout, stocks or options on this, price void, and then manage in between. Hope that helped, folks. This is my partner Greg Capper's amazing swing trading course that will teach you how to read all of those concepts. That is a thought process. So at the end of the course, you genuinely will know how to objectively analyze and trade anything that moves. Come visit us at mastertrader.com, take a trial to our advisory letters, our green trading room, and feel free to email Greg at mastertrader.com, Dan at mastertrader.com, and we will see you next time.